Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linen Associates with your agriculture update for this Monday, and this is the 13th of March, 2017, about 1:45 p.m. Central Standard Time. Well, by now you know about the massive storms that are moving through the Midwest and right onto the East Coast. I just spoke to my wife, who was actually flying out of town to D.C. tomorrow, and they've rerouted her plane to Charlotte instead because she's ending up deep south. But amazing, the airlines are doing that already, so that gives you an idea how bad this is going to be. You had today a break in wheat and corn, but in the meat markets, they were all up off of the livestock that gets impacted during heavy snowstorms. Beans pretty close to unchanged, meal the stronger performer, sugar down a bit, but a big rally today in the cocoa market. Now, as you take a look at the energy complex, you can still see that there's pressure in the crude and there's pressure in the gasoline market. Now, as we come to the May soybean weekly chart, you can see there's been no bounce yet in the market. The low on a break low has been 992 3/4, and we're around on the close 996 1/4. On a close only chart, I have to make this 996 1/4. Didn't put that in. It's a dime lower than where that's at. It was actually human error on my part. When you take a look at the daily chart, you can see how the market's been coming down here, and the close was 10:06. So you've got yourself a heck of a break. Market's lower lows, lower highs, all that going on, and you had a bearish crossover. Now, when that bearish crossover happened, it took place, if you'll take a look at these numbers, not on Friday, but today. And you have not had a new low in the move yet. Normally, you get a bearish crossover and markets make lower lows, so I'm looking for that still to occur if this is going to be the type of crossover that says, and that could carry prices back down to the 999 level, which is the lower Bollinger Band at this point. As you take a look at momentum, what we've got now are 2 days in a row. Today, Friday, let's just check this right here, Friday, where both numbers are now under the 20 level. That's Friday. This was today. See how that is? But if you go back to Thursday, they're not there. So tomorrow's a key day for soybeans, if it embeds or not. And if it does, that means selling gets fairly aggressive on the upside. So those are things I'm watching. In the meal market, a bit of a lift in the market, and you're no longer with an embedded reading. So it's embedded and lost it like that. A bunch of markets did that. Copper did it if you're watching the metal markets too. Where did it turn from? The 100-day average of closes. There's rarely an edge on the first time that you get under or over a 100-day average of buying over or selling under. You can do it a few days, but you generally come back and pop on the charts. Does it happen all the time? Clearly not, but you'll see it if you practice with it. Here's a case where it got over it, for example, and then fell back under. Do you see what I'm saying? So it's a rule of thumb, but that's what charting is, a lot of rules of thumb. As we look at the May soybean oil chart, you got the lower highs, lower lows. You might get into this lower Bollinger Band. We put out, by the way, our chart of the day today was on soybean oil. And as you can see, a very oversold market. In the corn market, you've now got a couple of days of closing under the lower Bollinger Band into oversold territory. And here again, for the first time in a while, you're under that 100-day average. So I wouldn't be surprised to get a pop over the next few days, but a pop doesn't mean a trend change, just a pop. You also don't have a swing line that's trending. You've got a higher high and a lower low, and since that high of 383, you have fallen 23 cents without a bounce. You've just literally let go on the whole downside. South American grains definitely improved. If you look at the May wheat, it's similar to the corn. higher high, lower low, under the 100-day average and oversold, and hit the lower Bollinger Band. I don't see an edge on the trade on the short side there. Sugar market to me still looks bearish, no change. Wouldn't be surprised if it makes a run for the lower Bollinger Band here of 1768. It's got the embedded reading until that's lost. I remain in the bear camp. Now in the coffee market, you had a big run to the upside. And even with that run, you've got today both numbers on the slow stochastic under 20, the day before under 20, and the day before. So if it's going to lose its embedded reading, it should happen tomorrow on the opening of the market. If it doesn't, starts up and comes back down, watch out. This market could be in trouble. What's the trend? There is none. With today's outside day up, you now have a lower low and a higher high all at one time. That's of concern. Resistance around the 144.90 level in the chart. As I said in the cocoa, the setup started happening with higher lows, which you had even without today's action, and lower highs. If you're a subscriber to my research, you know that I say when you get lower highs, higher lows, you're narrowing in for something to occur, and that something was a breakout today. Given how far this market had come down, should not be a surprise if it makes a run for the upper Bollinger Band. In the cotton market, prices have pulled back too, and it looks like they're going to try to close under the 18-day average. The trend then would be down until prices take out 78.58, momentum pointing down. Still looks like lower prices. And as I said, in the meat markets, you had a good up today, but you hit the upper Bollinger Band in an overall sideways action. What do you think normally happens? Just what happened here. You start failing. You could easily get that occurring one more time. And there is no trend. You have a higher high and a lower low. I don't see a thing to do there. Feeders are different. Feeders have the higher lows, higher highs. They've had it. Today they got over the upper Bollinger Band. So the question is, do they bend the band out or do they immediately pull back? It doesn't matter to me because the fact that you're over the 18-day average means you can't be short. Being over an upper Bollinger Band, why would one buy over that? You only stay over the dotted lines, the black ones, over or under 5% of the time, not the edge, and you're overbought. I'd prefer to just stay on the sidelines. A market that continues to refuse to break. Interesting market. The hogs, higher lows, higher highs, could make a run at 71.07. This market has been talked about by pros left and right. It's going to break, and it just doesn't break. I find that fascinating. So let's talk about something. Tomorrow's Tuesday, and that means consensus puts out its bullish consensus report. What percentage bulls, what percentage bears. Now let me tell you what this is. It's a compilation of newsletters at one site. We're talking maybe 100 different people come onto the site. You get a 4-week free trial. Normally there's a cost to this. Absolutely free through us. And what it entails is you're going to get a user ID, which is your email typically, and a password. You get all these type of different reports that comes into the market. You can break them down by metals, softs, whatever you want to do. And these are some of the firms that write for this. Now, just take a look at how many names you're looking at. There'll be another list here, and yet a third one. These are all the big boys in the commodity markets, and they contribute to this. And from there on Tuesdays, they compile the bullish consensus. So if you give us a call today, we'll get your stuff to them so you can see it. Call us. Go to our website. You'll see a carousel of free offers with it. Click right up here. You'll see an I if you're watching me on YouTube. Fill out the form there, or under us on many websites. It'll say click here, do such, and it'll get everything out to you. At least we will. You have yourself a good day. I'm Ira Epstein, and I'll see you later in the day in my other videos.